Hello and welcome to this week's PAN webcast. It's been an interesting week with events on both sides of the Atlantic. In Europe, Greece was bailed out yet again. In our view, this solves very little, it just delays the problem and kicks the can further down the road. Sooner or later, the problem will come up again. In the US, we still have deadlock over the federal funding. Worryingly, even some attempts to come together by Democrats and Republicans have been hampered by Republicans coming in with incorrect figures. Hopefully they'll sort it all out by the 2nd of August. Certainly we think they will, and the problem will temporarily at least be resolved. But clearly, both in Europe and in the US and in the UK, there is going to be more money printed, and this is going to be bad for government bonds. We continue to avoid government bonds in the West. Now, in India, we had some very bad inflation numbers just recently, and interest rates went up by 50 basis points, 0.5%, rather more than expected. We continue to avoid India, having sold at the end of last year. So what are we doing? Well, we're keeping balanced portfolios in short-dated bonds, roughly half the portfolio, the other half spread amongst growth markets. We have a good exposure to China, which we still think is very cheap, and will probably be our best recommendation for the second half of 2011.